Hello ladies and gentlemen, Jay Tyler here. Welcome back to Jack Fund Management. America at one time had advantages: reputed rule of law, credibility, economically driven capital markets. Aggressively, we could ratify planetary turning. First, more and more layers underneath markets move markets. This appears by pointing at this Fed using swap lines to Swiss banks, which probably could use these billions in various ways: bailouts, buyouts. This S&B can buy US stocks. This is fingerprints of a manipulated soft crash instead of fancied landing. Saudi Arabia gave monetary aid to Ukraine for oil benefit, still keeping production lower. All along such a liquidity-driven market, as we gather, the Fed cannot really sell older, longer-dated paper back into this market, so they hold that while playing around with other maturities. America, though, sucks in dollar investors worldwide from other currencies sapping energy, while Europe, in this current form, we cannot see sticking around. Nancy Pelosi did not make out on her call options, as she usually does, leading us to suspect within, or perhaps even above, Congress, a smaller than ordinary cohort conducting things. With real inflation near 20%, this Fed cannot, in earnest, stop printing. Total assets held by them has barely budged, as seen here. During COVID, a lot of cash resulted in meager, actual wealth gains, except for some PPP abusers. Imagine that. America spent on non-productive things, no growth durability. America's S&P could see another, save for a 1929-esque, and with this administration we would not rule it out, chain of events. A flush could come, followed by, a year after, these kinds of recovery figures. Mainstream estimators, marketers, still have not minced numbers. Inflation or economic standstill on standby. This administration, in whom we do not trust, while we had elevated demand, refuses to pass policies to elevate supply. Across all visas, it looks like baboonery. For next year, we read, out of nearly 500,000 visas of this type filled, 26% could get processed. They, with a prima facie good head diplomat, gradually pushed Saudi Arabia away on a verge of entering BRICS, even accepting yuan for all oil trade. Other than unsettling current normalities, ultimately we do not pluck out what motive they have. This merely accelerates populism. Currency erasing looks reachable, including the yen, already at tissue paper, the pound following, and euro. Circling back to Saudi Arabia and BRICS, this once more mighty petrodollar may get partially challenged. The earth could either have more of newfound pockets of currency, or a new Bretton Woods could get trumped up. We see no, if few at this point, investments in America. Now people just play games. Citadel trying to scrape off some shorts, the Fed doing non-QE quantitative easing. Naturally, what this administration omits to say, so as to take inflation down, they have to wipe out many jobs. We see it that way. The vice chair of IBM recently ordained as much. Elon Musk slashed around 70% of Twitter. A bit after Ackman got out, Netflix, ticker NFLX, still holds a crown, adding more than 2 million subscribers in this economic backdrop during Q3, guiding for another 4.5 million next. Another megastar in the healthcare medical instrument space, Intuitive Surgical Inc., ticker ISRG, a trailblazer in robot-assisted surgery instruments for minimally invasive biopsies, a corporation that truly helps people, noted strong procedure accrual. To a great degree, held by many hedge funds, Intuitive had an increase of revenue by 11%. In the middle of this environment, we like models with less elasticity. We talked about Lockheed Martin Corporation, ticker LMT, what feels like to us endlessly. This year up more than 30%, if bought correctly, easily. Atop that, it looks like it broke out massively on oceanic volume. This name brings massive alpha, seeing as the Nasdaq Composite has moved in the opposite direction this year by virtually that same amount. Lockheed pays a respectable dividend, and regarding everything going on in this world, Lockheed remained one of our favorites from 2022 into 23. They employ abundance of workers, engineers, most have heard plenty about them. A security, defense, aeronautics, almost uniquely classed operation. They serve the US government and contract worldwide hand in hand with them. Aside from off-COVID lows, in decades investors had not applauded showing up in post-earnings action, an earnings report from LMT like this. What really jutted out, what investors may hear more about from select businesses, repurchase plans for Lockheed at an augmentation of $14 billion this year topped our outlook. Unrest in the Middle East, Iran, Ukraine, turbulence in Taiwan, all this volatility makes for a locus within which the F-35 constructor and Javelin missile system builder perceives problems to solve and heightened demand. Northrop Grumman, ticker NOC, in many aspects, a twin to LMT, develops air superiority platforms, strategic strike craft, air-breathing hypersonic systems, and precision munitions, etc. China may try to vie for this next decade. By 2035, Blinken now publicizes sooner. China may have Taiwan, more control over the Indo-Pacific. America already retrieved many assets from nearby. In the middle of all this, semiconductor makers, the West, in whatever new shape may get required to re-instruct themselves. We see this taking shape in dividend players, Lockheed Martin, Northrop Grumman, those making enough cash to distribute now, D.H. Horn Inc., and Phase Energy, ticker ENPH. From where we sit, whomever makes it through this turbulence will use a lot of lithium to power this upcoming decade. Ticker LTHM will get prized. We start to feel less puzzled by why this administration leeches SPR, strategic reserves, drive for polling numbers. Mockably, nobody, well I guess we do, rings an alarm about this. People may say XYZ about the housing market. The storyline usually gets peddled by those wishing for more property. Over time, most salaries have never kept up with home prices. Fiat gets doled out for the preciousness of time. Above that, it gets tossed about at a rate nowhere near value of assets of demand, key property, land, location. All across the curve, yields have moved wildly. A clock ticks. As badly as British Synod managed monetary policy, 10-year treasuries hung out higher than those gilt counterparts. The Federal Reserve has largely robbed all that it can. Whatever assets they claim do not cover it. At some point they will lower or credit seizes. Home markets typically confirm this. NAHB housing index slumping historically means 10 years follow. US, with this president swearing on a strong economy, treasuries slump, while VIX measures get hoisted. We feel curious if this Fed will, after all that time, unban personal equity holdings, after they top-ticked it and went full-out hawk. With Americans eating inflation, this administration muses on giving Ukraine another, which is every feature of laundering $50 billion. Brazenly, they rack this up alongside negligence in anything resembling oversight. USD cannot yet break 30, though American-wielding USD strength has started to break nearly every other political state. Call skews register a bear rally. ISM, over 2 decades of financialization in America, have closely overlapped with 2's 10s. Real rates at these levels has meant S&P PEs usually dip at least 5 more handles, if no earnings shrinkage, which we have not necessarily so far seen. Central bankers out at an apex now will wipe out US jobs. If they say 4% unemployment, this has never happened. We have to call that a straight-out lie. Unemployment to more than double per this data, lying originating from central bankers, looks like a conclusion here. Unsurprising given that ethics record they have. Back to hefty bear rallies, we take notice of China capping the yuan. Frequently, strategically, to prepare for crises, they sell off US dollars. While this bear may have an expanse to go, it has not had a waterfall episode. Breadth has crossed 90% up. This predictor only holds after a wipeout. Options tampering had turned this market for the most part into a football, rather than investment vehicle. As we view this, market makers play against market participants, while hedged options VIX volatility gets relatively held in place by contracts. Deducing that correctly, it could add up, seeing volatility has went MIA. Time has ultimate value. Muting volatility can expire 2 short-dated calls. This aligns with what we witness as US markets having a quarter-speed boil. These days, law barely works, supply, demand, economic sovereignty. More or less indistinguishably, markets have no law of gravity like a car crash in quarter cadence. American indices recently have, on the whole, turned into a penny stock. Behind it, just used for political leverage, and funneling what remains of America's sweat equity into those hands of a couple treasurers and bankers. As this pulverizing goes on, this Fed pays millions in interest to big banks by a medium of repo rates. Instead of remittances, returning cash to the Treasury populist savings. Since lower tier banks give almost no rate for savings, many storm to T-notes, shorter duration government debt. Proceeds on this to the red, white, and blue Treasury could go towards rate curve manipulation, procuring for optics certain parts of this curve. In our last video, dollars, ticker UUP, could kick off a rollover. A counter indicator to Ray Dalio, we have had that as a base case. China advocate, not that he cares. From America, he has sucked as much as he could. Xi removing former leader who has bluntly consolidated power as an emperor. Chinese, if one can call it, equity on this news faltered. Not sure how this caught anyone. We had for a long time waved our finger at the Chinese capital complex. Fed leaking some info about a lessening in rate increases, and Japan intervening as US bonds get, perhaps for some Fed fellowship, uncomfortably close to 5. We wait for a resloping prior to things getting even more volatile. As the Bank of Japan buys more bonds, will this Fed respond in kind? Something in markets almost juts out as one more hurrah. America cares about itself, protecting the dollar. It may not have to bludgeon every ally. Other parties have worked on de-dollarizing, Russia, China, and even dumbly Saudi Arabia. So the land of liberty may not keep pushing on with this, either having to sacrifice dollars for bonds or face down the pike quasi-BK. To add to that former list, Egypt has had currency problems as well. This may spur them to try some basket of currency / gold plan. Godspeed. Up or down, too many quarters of this market have gone off the deep end. Treasury volatility not seen since GFC days. Oil pulled in every which way. Semiconductors, FX. Schizophrenia runs rampant, nearly more than those in office worldwide. Things have not found equilibrium clearly. It checks out. After Britain lost the Queen, PM musical chairs, they do not even feign to blur lines. Will put a banker worth $1 billion to take a 100K salary. Solar companies will try to take center stage. Those top two have the highest cash. Charlie Munger, it could help not to worship these guys, has quite a bit of a headache supporting China, investing in Baba. In this war economy, China almost looks hands off. Israel neutralized the drone plant within Iran, and as most things get guided by algorithms, Aladdin, a main AI in markets, pretty much administers a sequence from before. Everything costs 40% more, yet Uncle Sam says we have 9% inflation. Trying to defend bonds at 92, especially around this election rotation. If TLT slips much more past that, and it easily could post-defense, all bets come off. Republicans and even party loyalists have pushed on this US president to seek a solution, not dragging out this Ukraine laundering and inflation stoking exploit till kingdom come. After everything lately, we can get partially back to micro. Chipotle, ticker CMG, saw steady demand. Facilitated by pricing power, they saw revenue bump up, juxtaposed against Google, ticker GOOG, where revenue came light, $57.27 billion against $58.2 billion expected, followed by $1.06 earnings per share instead of $1.25 anticipated. They cited digital advertising torpor as inflation gnaws into budgets and interest rates tighten spend. Microsoft barely eked out gains, edging above expectations. Leading up to this, we brought this up in video after video. No one got surprised, and guidance could only get harder. Amazon, another one, had announced forward sales Q4 far short at 148 billion of 155 billion consensus, 5 to 10% scant. It goes on and on. No longer day one, people may have to find a new fang. It might turn out into a Cisco of today. The S&P, BOJ still prop markets. Central bankers now try to choke an everyday man, woman. Governments can barely handle these rates, yet no problem, they can turn on printers. Households do not have such an appliance, though they do have payments. Further, it starts to lay bare that a lot of these professed businesses have no purpose. These CEOs, highly paid, mismanage, or simply do not care about stakeholders. This does not include those that completely scam the public, like a Trevor Milton, Chamath, such like. This responsibility chain dissolved, rates, credit distortions caused by this Fed, caused by these administrations, caused by anyone above or behind them, kicking the can. holding no responsibility. This veil of confidence on all sides of this Ponzi of America starts to unravel. It unfolds itself in this fact that America, let alone Britain, have started to unveil volatility more akin to those defined as emerging markets. Speaking of emerging markets, could we admit that most woke culture amounted to a blunder? We may very well short some woke culture via one way it manifests itself, Europe. We might at some stage long the yen, though we feel unsure about them. Controllers there, if they can, will not further conflagrate that currency they have. Still a long shot, they may, like many state actors these days, make a bonfire of an individual paper fiat. One really sees this great reset WEF strategy playing out in securities. Agricultural inputs doing oddly well, ammonium nitrate, phosphorus, fertilizers, and clean water names. We will probably go long war as Northrop Grumman, ticker NOC, the MIC, military-industrial complex, has reared its head under Democratic leadership. This extends into space where Grumman has heavy involvement. They build a B-21 Raider, and going into the next decade, deterrent programs garner demand. Sometimes first to falter, first to base and rebound, some glints of light have sprinkled throughout tech. Pinterest, ticker PINS, gained revenue, especially globally, where many used more storyboarding, visualization from everything to outfits and decorum, though still a bit heavy on cost. Thank you as always, ladies and gentlemen, for stopping by for all things finance, markets, and key news. Join Jack next time.